Is Volkswagen overtaking Tesla as the biggest EV company? On the 24th of May, at the World Economic Forum in Davos, Switzerland, the chief executive of Volkswagen, Herbert Diess, claimed to believe that Volkswagen will be able to overtake Tesla as the biggest electric vehicle company in the world by 2025. Diess believes this can be achieved by simply alleviating Volkswagen's existing supply chain issues, which would enable Europe's biggest car maker to overtake Tesla in terms of EV sales in just 3 years. Want to know more about it? We'll tell you everything you need to know in this video. But first things first, welcome to Elon Musk Times, the place to be for news about Elon Musk, Tesla, SpaceX, and today, the possibility of Volkswagen overtaking Tesla and becoming the biggest EV company in the world. Don't forget to subscribe to our channel and make sure to hit the bell icon to never miss a video. Now, let's get started. Tesla versus Volkswagen, the EV supremacy race. Since Tesla started making waves in the auto industry, there has been a lot of buzz around electric vehicles, with almost every top auto manufacturer doing all it can to transition to cars that run on batteries. While Tesla has the major advantage of being the first to make any real progress in EV manufacturing, other companies have certainly been trying their best to knock Tesla off its spot as the biggest EV company. However, none has come closer to doing this than Volkswagen. Volkswagen is Europe's biggest car maker, and in July 2015, Herbert Diess was brought in as CEO. Although he has been criticized for his methods, who isn't these days? These days, Diess has got things moving very fast at Volkswagen, inspired perhaps by Musk himself. In 2021, the German automaker doubled the number of battery-powered electric vehicles it sold internationally. The Volkswagen Group, which encompasses several brands, including among others Porsche, Audi, Lamborghini, and Ducati, sold 452,900 all-electric vehicles and 310,000 plug-in hybrids. In comparison, Tesla sold more than 936,000 electric vehicles. So while Diess seems pretty confident, these sales numbers show us that Volkswagen still has some way to go. Diess has openly talked about his admiration for Musk and his methods at Tesla. One time he even invited Musk to a company managers meeting to the surprise of everyone. These days the two seem to be good, albeit still competitive friends. Inspired perhaps by Musk's success with Tesla, Diess has turned Volkswagen into the first car maker that has a chance of surpassing Tesla when it comes to EV sales. As we explained in the intro of this video, at the recent World Economic Forum in Davos, Volkswagen CEO Diess explained how resolving existing supply chain problems will probably contribute to the German car giant gaining momentum in the upcoming months and ultimately surpassing Tesla in terms of EV sales. While Diess might be a bit optimistic, considering last year's difference in sales numbers between the two companies, Volkswagen certainly has a shot at surpassing Tesla. Though the company still has its internal combustion engines dragging it down, they expect to make a full transition in the coming years. And while Tesla has the advantage of always having been fully electric, Volkswagen has the advantage in the number of global factories and cars it can create in a week across its factories. Besides, Volkswagen isn't exactly new to building EVs. Soaring oil costs and fuel shortages pushed Volkswagen to investigate alternative powertrains in the early 1970s. At the Center for Future Research in Wolfsburg, Germany, an 11-person team created a battery system to power Volkswagen's first all-electric concept vehicle, the Elektrobus. The Elektrobus was powered by hefty, low-capacity lead-acid batteries and had a limited manufacturing run of roughly 120 cars. Like most current EVs, the battery pack was installed on the vehicle floor in the center of the chassis, which was essential given its size and 1,847-pound weight. However, unlike today, its range was just 25 miles and its peak speed was only 43 miles per hour. The Elektrobus was followed by other models like the Golf MK1, the Golf City Stromer series, and the Jetta Stromer. It wasn't until 2013 that VW produced their first mass-market EV, the e-Golf. The e-Golf was the first Volkswagen vehicle with a solely electric drivetrain, and it was also the first fully electric Volkswagen to be sold in the United States. The automobile had all the advantages of a best-selling compact car, zero tailpipe emissions, an EPA estimated 83-mile range at launch, and a nearly quiet driving experience. Its 24.2 kilowatt-hour lithium-ion battery could be charged to 80% capacity in around 20 minutes using rapid charging technology, and later versions of the EV could cover 125 miles on a single charge. Learning from the success of the e-Golf, Volkswagen brought the ID.4 to market in 2021, and it was a major success. Volkswagen's first all-electric SUV arrived with an EPA-estimated 260 miles of range, 201 horsepower, DC fast charging capacity, and a host of features and technology that made EV adoption easier. Starting from the Electrobus, this gives Volkswagen 50 years of experience making electric vehicles. So, with that much experience, the highest number of factories in the world, and a determined CEO, what's holding Volkswagen back? While Tesla has a stronghold in the United States, VW was able to rival Tesla in Europe and China, the other top two EV markets in the world. While Tesla holds a bit of an advantage in China, Volkswagen and its impressive lineup of electric cars should have no problem dominating Europe. As of now, VW is the only legacy automaker with a meaningful EV lineup, and with plans to move battery production in-house like Tesla, they are sure to give Tesla a run for their money. Don't want to take our word for it? According to a new comprehensive assessment of the global EV industry by research company Bloomberg Intelligence, Tesla is projected to maintain its top rank in battery electric vehicle, or BEV, sales for at least another 18 months as legacy automakers struggle to sell a significant percentage of BEVs in 2022 and 2023. The report shows that, except Volkswagen, most traditional automakers lack the short-term financial incentive to overtake Tesla due to escalating battery costs and a lack of scale. With the demand for BEVs expected to triple by 2025, the German manufacturer is on track to surpass Tesla's BEV volume in 2024. The report emphasizes that legacy automakers are unlikely to be successful in divesting BEV-related assets that are intertwined with their combustion operations and whose cash flows are paying for the transition to compete with Tesla's $686 billion market cap, which is nearly double that of all US and EU legacy automakers combined. The one exception is Volkswagen, which plans to introduce the IPO of its Porsche brand in the fourth quarter, a move that could generate an €85 billion valuation. The cost competitiveness of BEVs depends heavily on battery pricing, and Volkswagen is investing up to €30 billion in the supply chain by 2030, including the development of 6 new battery cell factories in Europe. So, Volkswagen is certainly on the right track there, but what are the chances of them resolving those supply chain problems that Diess briefly discussed in Davos? The auto industry is still struggling to meet the demand for vehicles and procure essential parts more than 2 years after the coronavirus outbreak began. Since 2020, several variables have come together to create what many would call a perfect storm of difficulties. In addition to causing lockdowns and labor shortages, COVID and its variants have also increased demand for semiconductors, which has resulted in excess demand and very low supply in sectors including automotive and consumer electronics. It is expected that shortages of essential resources, particularly in battery production, will continue to limit the rise of electric car sales in the years to come. Due to the persistent shortage of semiconductor chips, the automotive sector is experiencing major supply chain problems. In addition to semiconductors being in limited supply, other essential components are also becoming difficult to find as almost every manufacturer looks to transition to EVs. It's also critical to remember how expensive and time-consuming the fabrication of semiconductors is. Even after investing billions of dollars, it still takes roughly 26 weeks to produce packaged chips. So at this point, it looks like it's anyone's race to win. While it'll be almost impossible to dethrone Tesla, if anyone can pull it off, we think Volkswagen has the best chance, and you can trust that we'd be watching both companies with keen eyes. So what do you guys think? Do you think Diess is being too optimistic, or is he onto something here? Let us know in the comments below, or, leave a fist bump if you like the video. And if you haven't already done so yet, please subscribe to our channel and hit the bell icon so you won't miss our next video. And we'll see you in the next one.